Welcome to Fed Watching for this first week in December. And just a reminder, if you listen to this on iTunes or Stitcher, there's a YouTube channel with video. And if you're watching on YouTube and you prefer podcasts, you can find this wherever you download your podcasts. So there won't be any daily update this week. I was working out of Santa Barbara instead of home in Oakland. But there was plenty to talk about. Big week in the markets, a lot of economic news, and we'll get right into the market recap. Despite being closed for Wednesday in honor of HW's life, we had a pretty big down week, and it was almost down a lot more. We'll talk about it a little more when we get into the economy, but the Fed kept going the direction they have been going. Even less likely that we'll see rate hikes end of the year and then into 2019. U.S. markets down 4% and 5%, basically at flat for the year at this point. International stocks have done a lot better than U.S. stocks in this latest downturn, but they're down 10% for the year instead of flat. So you take what you can get where you can get it. What we saw was really a tale of two different types of sectors: utilities, real estate, really anything that is sensitive to interest rates did not go down nearly as much as everything else that was down 5 or 6%. And a lot of this is reminiscent to the taper tantrum that we had a few years ago now, where the market basically saying we think the Fed is raising rates a little bit too soon. We think this is going to be bad for the economy. And so we're going to discount these future cash flows a little bit. We're going to discount the growth. We're going to expect that things are going to be a little bit worse. It seems like the Fed is agreeing, and it's not clear if it's the stock market signal or the other indicators that they have coming in that are making them believe that. But it seems like everyone's headed the same direction as far as, even though we're at very full employment, even though we're seeing a little bit of inflation, thinking rates might not need to go that much higher from here. Turning to the economy, it's starting to sound like a broken record, but last week was just like the last couple months have been, where not really any surprises with any of the data, so I won't bore you with any of the readings. But numbers are still good, not necessarily trending any better. It's sort of unreasonable to expect them to be able to get any better than where they are. Big news for the week was basically Fed remarks across the board were all a little bit dovish, meaning less likely that we'll see rate hikes. Lael Brainerd, she gave a speech on Friday that really summed things up, and I'll read just a little bit of it for you. Our goal now is to sustain the expansion by maintaining the economy around full employment and inflation around target. The gradual path of increases in the federal funds rate has served us well by giving us time to assess the effects of policy as we have proceeded. The approach remains appropriate in the near term, although the policy path increasingly will depend on how the outlook evolves. That sounds to me like they're saying, we're happy we've gone slow so far, and we're going to keep going slow. We might even stop or reverse course and just see how things settle out. She talked a little bit more focus on financial stability, which sounded a lot like Jay Powell's talking points at his last speech. And also her major concerns seemed to be concerns about corporate borrowing, which was another one of things that Powell brought up. So it seems like the talking points for the Fed are congealing around those few ideas. And again, less and less likely that we'll see a lot of rate hikes to come, at least in the near term. A few miscellaneous items that we haven't touched on in a little while. 10-year Treasury was way down. It's down about 2.85% right now for 10-year, and that's from getting into the threes just a month or so ago. A lot of that is reflective of not seeing a lot of inflation showing up. Oil way up. A lot of that's been the OPEC talks. A lot of that probably just supply and demand, not had anything to do with OPEC. And then Bitcoin is down another 25% from the last time we talked about it. So Bitcoin is down in the mid 3,000s at this point. I feel bad for anyone that's trying to make a living trading that every day. Thanks for tuning in this week. Don't forget to rate us if you're on iTunes, subscribe if you're on YouTube, and you can send emails to fedwatchingpodcast@gmail.com, and I'll be sure to address any questions or cover any topics that you're interested in.